Hello there, this is Chris from Forex. Do 15-minute video tutorial with regards to Forex trading. Okay, so I just hope that everybody's well and good. Okay, so yeah, in this video, okay, so we're going to open a position about what are the direct indicators of, so to say, buying and selling a pair of currency in Forex trading. Okay, so previously we already had, so to say, discussed about how we are going to buy and sell, right? In that particular application or platform, so we are able to know that, right? So today we are going to go into the deeper understanding of where are we going to buy and what are those instruments that we are going to sell, right? So, based on the previous discussion that we have as well, that would be the factors that is basically intimidating the market, should we say, movement, right? So that would be the thing that we are going to do. Okay, so yeah, let's begin. All right. Okay, so yeah, uh, I just hope that the trading week past week has been very new, whatever it is. Okay, so uh, yeah, because in trading there would always be that kind of so to say result. Okay, so every week you're going to measure your so to say your results. Okay, so whether that is a gain, so to say, trading week or a loss trading week, and then it's natural that at times, okay, so there would be gains and there would be losses. Okay, so as long as it is basically just half of your so to say the loss versus the reward must be much more um, lower in percentage. Okay, so I just hope that you'll be able to take that one in. Okay, so today let's get back to first little review to the instances or the statements that we were able to make or we will be able to say like the profit that we are earning yesterday. And so are they. So the first one is that we are able to know uh, the factors that is basically would have to intimidate the market prices. Okay, so um, the bouncing numbers. Okay, so you really have to take a look at that. Okay, so you really have to decipher all of those underlying, so to say, instances why it is so. Okay, so how you'll be able to do that? Okay, so we already had, uh, bullets for that, right? So the first bullet that we have is basically the interest rate of the particular country, right? So it is too much important that we will be able to, gain understanding the interest rate that is being imposed, the financial policy of a particular country, and you have to be um, so so to say like you really have to inquire all of those information. So you really have to follow all of those, so to say, um, uh, so to say, place, okay, whatever they are, like me, I'm in the Philippines, and I am, so to say, using the instruments or the currency of Euro and USD. Okay, so I have to make it sure that I had an access to the Federal Reserves, okay, for the Euro and for as well for the United States for the dollar. Okay, so I have to know all of the details that they are basically having in there. Okay, so the movement, the speeches, the totality of their fiscal policy. Okay, so that is so much important as a trader, or even if you are going to venture as well in stock market. Okay, so that go directly to to place your trade. Okay, so you have to make it sure that you have all of those. Okay, so if you are going to say that the interest rate of that particular, say for example, there will be an announcement from fiscal, so to say, executive in euro that they are basically increasing, so to say, interest rates. Okay, so correct me if I'm wrong. Okay, so but if you're going to increase the interest rate, so you have to make it sure that you have to make it sure that okay, you have to make it sure that you were able to know whether that particular benefit would be to gain an advancement to their economy, basically to their GDP or to their um, yeah, economic movement. Okay, so that is so much important. Why is it so? Because you know the interest rate would have to affect the, should I say, the um, other services at a particular place. Okay, so it will affect the the rates of the currency. Okay, so um, say for example, okay, so they are basically announcing that they're going to counter interest rates. So if you're going to say that, so that is already a big indicator. This is basically a good, so to say, yep. Okay, so this is already the opening position. We're able to check the MetaTrader chart in there, and we'll be able to see the opportunities for us to sell. Okay, so sell this particular, so to say, opening position. And this opening position is all about a candid way of looking at the market itself, where you are going to buy and sell. After that, should I say, should I say, after we'll be able to give analysis or, should I say, interpretation to the different happenings around. Okay, so say for example, they're going to counter that interest rate. So it is basically a sign that you are going to um, buy. Okay, so buy euro to USD because the euro is basically the one. So once it is said, okay, so in other words, it will boost up their should I say their economic confidence. Okay, so it will basically jump up. Okay, so they are, in other words, they are comparing, so to say, the so to say the movement or the sloping up of their economic activity, right? So that is so pertinent to relative to the prices of forex market. Okay, so that's basically it. Okay, so that's the thing you are going to buy, and before you're going to do that, okay, you are going to do as well, should I say, fact check. Okay, how you will be able to do fact check. Okay, so you are going to observe the graph. Okay, so once it will be announced. Okay, so that they are going to counter interest rates or something. So you are going to observe the market, and there would be, so to say, websites that are available. Okay, so thousands of websites are basically available on the web. You will be able to distinguish those, should I say, um, should I say, um, those ideas or those, should I say, facts that you were able to gather. Okay, so and then do not place the order right away. Okay, so you just have to observe, and then you will be able to notice the changes. Okay, not abrupt. Okay, so not abrupt. So maybe it will take a day for that specific to the same policy to take effect on the graph of forex, should I say, um, going, right? So that's basically one of those. All right. Okay. So um, having said that, okay, so you are going. to research as well USD, United States, so to say, fiscal policy as well. Okay, so you are going to balance as well what would be the thing that they are also doing to the economy. Okay, so whether the boosting of euro dollar would have a significant impact, like should I say, an impact like should I say the dollar will, I mean, the euro dollar, the euro money will become stronger than the US dollar. Okay, so you have to to check those pertinent values within the economy. Right? So that's one thing. All right. Okay, so the next thing that we're going to, what are those indicators when you're going to buy and sell? Okay, so from that interest rate, from the inflation rate as well, you'll be able to notice, okay, so there would be an increase of prices of goods and commodities and services to that particular country. So if you'll be able to know the consistencies of the inflation rate, so that would be basically the time that you're pair. So say for example, um, USD and Japan. Okay, so you'll be able to see that there will be a soaring, so to say, inflation rate or difference of prices from the price that they do have before and today. So you're going to sell your USD in exchange to Japan, and you have to make it sure as well that you are as well looking at the Japanese economy as well. Okay, so good pair would really have to boast up with profit. Okay, so that's a technique that is basically adaptable even to some experts, to some sort of pro in forex trading, or even the beginners. Okay, so again, this is basically for beginners. So yeah, if you are into this, this is basically your place to learn, and I am just basically sharing to you my ideas as well. Okay, so how this economy is going to move, whether it will pump up or it will dive down. Okay, so that's basically it. Right. So the next thing that we are going to have would be, yeah, that's basically one thing. Okay, so if you are going to observe a particular country with regards to the status of to the inflation rate that they do have. Okay, so if you see that there is a consistency with the rates, with the pricing of with the with so to say increasing price, so that will be the time that you're going to sell. Okay, so um, in relative to the base currency, to the counter currency. All right. So the next thing would be calamities. Okay. So say for example, Saudi. Okay, so there would be, so to say, like calamity that is happening in there. I think their depot, oil depot, was been, so to say, accidentally, there is spillage rather. Hang on. Okay. That's an issue with me. Alright. So it's charging. Okay, so there's some spillage with the oil depot. So it would have to be that there would be a sudden increase. So this is for the natural calamity. Okay. So yeah, the good so the same thing that you are going to do there. Okay, is that you are going to buy. You should buy oil commodity, right? So that is it, because the it would have to give us an expectation, based on the assumption that we are going to basically um, increase the price of the oil worldwide. Okay, so that's basically it. Next to it would be this what we call, so to say, political, so to say, events. Okay, so like changing of government positions. Okay, so elections. So that would be basically would have to affect most especially the kind of leadership that particular elected official is, whether he or she is efficient with his or her, so to say, administration to the forex prices. Okay. So, say for example, okay, so um, the resident went to the 10th Street down in the UK. So it was been able to observe at the graph that the economy Great Britain is falling down. So after his resignation, it goes up, right? So that is basically the time that you're going. So uh, uh, irritated to some years, but that is so much important for us to further our learnings in forex trading. All right. So okay. So I just hope that I was able